When I'm going work, it's like, can I have this? I'm figuring out.
You ready, Dan?
Yes.
All right, we'll call the regular meeting of November 18th, 2025 to order. If we could stand for the Pledge of Allegiance. Pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, please.
Mr. Douglas.
Here.
Ms. Hayes.
Here.
Mr. Horvath. Mrs. Sensi.
Here.
Mr. Thompson.
Here.
4 members are present.
Is there a motion to approve the agenda?
I'll move.
I'll second.
Roll call, please.
Mr. Douglas.
Yes.
Ms. Hayes.
Yes.
Mrs. Sensi.
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
Is there a motion to approve the minutes of the regular meeting of October 14th, 2025?
I'll move.
I'll second.
Any discussion? Roll call, please.
Mr. Douglas.
Yes.
Ms. Hayes.
Yes.
Mrs. Sensi.
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
So on our agenda here, we have a presentation by the Ohio Department of Education and Workforce, but they're not quite ready for that. And so we will come back to that. So we'll move on to board member reports. Is there anyone wishing to give a report this evening? All right, I'll just mention I'm part of a group. The Men of Honor Foundation is having a turkey giveaway this Saturday, the 22nd. In Painesville at Red Creek Bar and Grill. So we're having 200 turkeys that we're giving away. We're doing that in conjunction with the United Way of Lake County. So if you know anybody who is in need, they will just come in through Route 20, pull into the Red Creek Bar and Grill in Painesville, and they could get a free turkey, and then they'll exit out on Bow Hall. So just thought I would mention that as we're live streaming here in case there's anyone in need for a turkey. All right, we don't have anyone registered for public participation, so if we could move on to the treasurer's report.
Thank you, Mr. President, members of the board. Item number 9.01 are financial statements submitted to the board for approval. Just in summary fashion for the general fund, through the month of October for the year, we had revenues of $11,595,582. Expenditures of $11,450,125, the ending total fund balance of $2,013,415. Comparing that to October of 24, we had revenues of $11,481,109, expenditures of $9,533,411. and an ending total fund balance of $4,549,771. With that, I recommend this resolution be adopted.
We have a motion?
I'll move.
I'll second.
Any discussion? Roll call, please.
Mr. Douglas.
Yes.
Ms. Hayes.
Yes.
Mrs. Sensi.
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0. My second item is one then and now certificate. I apologize for the format. I still need to work on my formatting skills in this, but we just have one, and I recommend approval.
I'll move. I'll second.
Any discussion? I can actually read this one. It's big enough there.
Yeah.
Roll call, please.
Mr. Douglas.
Yes.
Ms. Hayes.
Yes.
Mrs. Sensi.
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0. And my final item is a list of adoptions to be accepted. It's a very long list.
Donations.
Donations, yes.
Adoptions.
Did I say adoptions?
Yeah.
We don't have any of those.
No, we're not adopted.
Donations. And I will list them. We have $500 from Chapel United Methodist Church to Madison Nutrition Services to be used for the Angel Fund. A donation of $280 from Georgetown International Relations to Model UN. Donation of $200 from Madison Garden Club to Madison High School to be used for ecology projects. Donation of $250 from Hearn Plumbing, Heating, and Air to Madison Middle School to be used for the middle school department musical. And these next several are also for the middle school musical, including $250 from Capel and Hagara of Madison Dairy Queen, $100 from Steve and Jerry Auto Parts, $100 from Richard B. Newbert, $250 from the Madison Choir Boosters, $100 from Zolant Veterinary Associates. We also have a donation of $300 from Anonymous to the Madison Middle School Principals Fund to be used for Santa Streaks. $60 in gift cards from HB Nails and Spa to North Elementary to be used for PBIS. Another $60 in gift cards from Sheets to North Elementary to be used for PBIS. A donation of $500 from YGT Realty, PBA Remax Rising, again to the middle school drama department for the musical. Donation of 480 donut bowls from Dunkin' Donuts to South Elementary to be used for family night. Donation of $100 from Sherry and Timothy Niederkorn to Madison Middle School, also for the drama department musical. And a donation of t-shirts from Terry G's Car Wash given to all students and staff for the Madison Pre-K Tour D Pre-K fundraiser. It's quite the list. I recommend the board accept these donations.
I'll move.
I'll second.
Any discussion?
Thank you for all
Yeah.
the donations, and we always have an extensive list of donations.
Thank you. Roll call, please.
Mr. Douglas,
Yes.
Ms. Hayes,
Yes,
Mrs. Sensi,
Yes,
Mr. Thompson.
Yes.
Motion carries 4-0, and that concludes my agenda items.
All right. Thank you. Dan, do you think you could introduce this?
Are we okay to get started? Okay, yes, if I can just take a moment, I wanted to thank Chris Wright and Kim Richards from the Department of Educational Workforce Fiscal Office coming in to give us an overview of the financials within the district and help provide some framework for us. So if you guys would like to come up and they have a presentation for the board and for those who are able to attend tonight.
Thank you.
Thank you both very much. Thank you.
So I'm not necessarily hiding back here, but I have some notes I may need to refer to here as we look. My name is Christopher Wright. I'm a fiscal consultant with the Department of Education and Workforce. This is Kim Richard, Assistant Administrator with the Department of Education and Workforce. And we work out of the Office of Budget and School Funding, the financial analysis and oversight portion of that office. So the reason we're here tonight is because every year a school district is required to file a financial forecast at least twice in that year. In this particular case, this school year, this fiscal year, that first filing was due October 15th, 2025. The next one is due by the end of February 2026. So those are the two filings that have to happen during this current year. And what a financial forecast consists of are 3 years of actual information here at the beginning, the current year budget amount, and then 3 additional years of forecasted revenues and expenditures. So we'll talk a little bit more about that as we go through, but this is where our work starts. We examine each of those forecasts as they are filed for every school district in the state of Ohio, all 660 K-12s and JVS. So the financial forecast communicates critical financial information for internal and external stakeholders. It engages district administrators, local board members. All the decisions made at a local level are based on figures that are presented in that forecast. Community members use these documents. The department examines these documents. The auditor of state and general assembly may also take some interest in the information that is presented in these forecasts. It can help them determine priorities and legislative issues as well. It drives decision-making, short and long-term within the district. It informs levy cycles. It is the tool that we use to foresee and avoid fiscal distress. It also helps fulfill some of these obligations related to fiscal oversight, declarations, and written plan requirements that we'll talk about as we move on here. So the forecast rule was updated back in fiscal year 2023. And basically, that update just clarified that a financial forecast is not just a set of numbers on a piece of paper. It also consists of the assumptions that drive those numbers. And so there's a requirement in place that each number that you see in that forecast should have sound assumptions backing it up. There should be sound rationale for why those numbers say what they say. And when a board approves a financial forecast, they're not just approving the numbers, they're approving the assumptions and all that language that goes into building those estimates as well. So it's important that there's a realistic basis for those projections. Known operational revenues, expenditures, and resulting cash balance should be used as a basis for projections. So you might ask yourself questions like, how did we spend our resources last year? What were the major components? How will we spend it this year? What assumptions are used to project the future years? And this may be a combination of maybe some professional judgment. Maybe there's some projects that you know of that are going on in the district or had gone on in the past. So it's a combination of experience, history, known factors, controllable factors. And sometimes you just have to make informed judgment calls on what those numbers may be. So the department examines the forecast, like I mentioned a few minutes ago. We are required to examine those forecasts for potentials to incur deficit during the first 2 years of the 3 forecast period. Also the current budget year as well. So it's really those first 3 years. So the initial 3 columns in the forecast were actuals. Then there was the current year, and then there were 3 projected years. So the current year and then the first 2 of the projected years are what we examine for deficit. A district that has a deficit in any of those years, that district will receive a notification letter. And districts are required to take steps to eliminate deficits in the current fiscal year and to begin to plan to avoid future deficits. So we'll kind of walk through what we noticed here and the letter you received and what the forecast look like. So this is actually what we call precaution. This is not a stage of oversight. It's not a formal stage of department oversight. It simply refers to districts that are flagged as having a deficit in one of those 3 years. So if a district is showing a potential deficit in any of those 3 years, that district receives a notification letter. That notification letter tells the district that it has to complete a written plan in order to avoid the projected financial distress. Statute requires those written plans in order to eliminate those deficits. And we examine line 10 for the current year in year 1 and then line 12 for year 2. And that will make a little more sense maybe with the next slide. So this is the forecast that was filed on October 13th. Like I mentioned earlier, October 15th was actually the deadline. So this is that filing. This particular forecast, we examined line 10, which is fund balance, or certification of appropriations, which is a fancy way of saying it's your cash balance minus your outstanding purchase order. So we examine line 10 in the current budget year and in forecast year 1. So these right here. And as you can see, they're red and they're negative. So those are projected deficits in the current year and year 1. We also examine this year 2, forecast year 2 at line 12. The reason we use line 12 in that particular year is because districts have renewal levies up sometimes, and we want to make sure that we give the district credit for being able to pass a renewal levy in the second projected year. So in this case, all 3 years are projecting deficits. And that's why we are here tonight. So because there are projected deficits, this district received a letter on October 22nd. It's to the board president, superintendent, and treasurer, saying that we noticed those potential deficits. And I'd like to point out here, it's important to note that we send this to the board president because the written plan that's required to overcome the projected deficits, it's a requirement that the board passes that plan. It's their obligation and their responsibility to pass that plan. In this particular case, right now there is a deadline of December 21st to develop and approve and submit that plan to the Department of Education to overcome that projected fiscal distress. The letter finds what the projected deficits were that we saw in the forecast document. And it goes on here to discuss some of the legal obligations the district has related to developing a written plan to overcome that financial distress. We get this question a lot, how's everyone else doing? So the fall precaution and fiscal oversight districts, as they were flagged on this last update, which was due October 15th, we have 48 districts demonstrating 70 flags. So it's possible for a district to have more than one flag. In this case, Madison has 3 because there are deficits in all 3 years. So that's entirely possible.
Let me ask a question, Chris.
Sure.
Getting back to your slide before, it said December 21st,
Mhm.
everything. What happens if this current board does not chose to do that right now? And it, is there a penalty that will happen if we don't get a,
So there are mechanisms to ask for an extension. But beyond asking for an extension and being granted an extension, not developing the plan or submitting it within the timeline required is cause to go into fiscal oversight. So right now you're not in oversight. You're in what we call precaution to try to keep you out of oversight. So not developing a plan and submitting it by the deadline would be cause to become under.
once you submit a plan, can you adjust it? Can a future board adjust it come January?
So we examine forecasts.
And the reason I asked is because we had an election
Sure.
and 3 of us will not be on the board. And there's 3 new individuals will be on the board with the other remaining 2 and stuff. And I just want to find out where my responsibility is
Okay.
as a board member, because, these are big changes that we're going to have to make. And I personally think that should be held off to January or to February, or whatever they get in to make those long-term decisions, because that's what the community has voted in, people to make those choices and stuff.
So the plan is due on December 21st, and this board is the local authority controlling this district until the new board members are put on to the board. If the board wants to request an extension, a written request can be submitted and it would be evaluated. But whatever that determination is at the time of the request, that would be the due date. If you don't submit it, then that would be cause to go into fiscal oversight. With regards to changing the plan, the important aspect of this process is that we have plans in place. If the district wanted to change the plans, but the net effect of that was keeping the district in the black, that would be okay. That's one of the reasons our written plan, and we haven't gotten into it, but we have a section in there called changes of assumptions. Well, that's to give effect to favorable or unfavorable things that are occurring in the school finances. We also, can say, well, things change, so we want to change our plan. Or your board changes and they want to change the plan. As long as we're keeping the plan and the objectives of the plan, which is to eliminate that deficit managed, then that would be okay. We would amend the plan, it would have to be reapproved, and we would carry on with this.
I just add one thing here. So we're going to be voting later today to address the deficits that are in year one. So those will be resolved in about an hour. Year one will be taken care of. And then, and when these folks are done presenting here, Dan is going to talk a little bit about what has caused us to go into the red for years 2 and 3, and those numbers based on changes that have occurred, including the county commissioners made tax changes. There's other reasons for that, and Dan can explain what those are. And then we have time to evaluate whether we're going to request that extension or not. It's not even until December 21st, but just wanted to provide a little clarification there about what we're doing.
The whole process is built to keep you out of oversight, but it's also overall, it's built to keep a current year deficit from ever actually happening.
Sometimes when the deficit is large, we won't even send a notification letter. We will send a year-end fiscal caution letter. And normally when that happens, districts are aware they have a problem and they're like, yes, we need to be in fiscal oversight. But through the course of our technical assistance and conversations that we've already had with the district, we know that you can avoid that current year deficit. So we felt it was appropriate to hold the horses and see how.
No, we definitely appreciate the collaboration,
Absolutely.
that we'll be having moving forward.
I agree. I appreciate it also because I certainly don't want us to go into fiscal oversight. But at the same time, if we ended up going into it for the last part of December, because this is December 21st, you're saying that we have to. And then the new board comes in and they, choose to then make whatever drastic decisions have to be made, of course. But they make the choice of what they want to do with that. Does it then pull us immediately right back out of oversight? Because they've then made those changes that were necessary.
I understand your question. I feel like, and I'm not trying to avoid it, but I feel like we should get through the process and then circle back to that. The short answer is once you go into caution, you can't get out in the same fiscal year. But we'll talk about it some more and then we can circle back to what your thoughts might be on that or if you have any questions.
Thank you.
Thank you.
So based on the examination from the October 15th forecast, we had 48 school districts that were flagged. For the current year deficit, there are 2 districts flagged in the current year. You're one of the 2 in the entire state. The other one is in fiscal emergency. You were also flagged as a year 2 deficit and a year 3 deficit. A forecast year 1 deficit and a forecast year 2 deficit. We changed some of that language here recently with the legal updates to the forecast process. So I'm still struggling to remember exactly what we call those. This is a snapshot of what spring looked like. There were 8 school districts flagged with 15 total flags. We usually see less flags in the spring. We see more of them in the fall. And it kind of makes sense because if the whole process is built to try to get ahead of this, we're going to work with districts in the fall. We're probably not going to see them in the spring forecast because they will have developed plans in the fall and you won't see those same deficits in the spring. So we talked about the district has to develop a written plan. And so written plan items have to be within the control of the district. Uh, It means that things that are just conceptual or things that are not directly under the control of the board or administration really shouldn't be considered in that plan document as helping to overcome the projected deficits. The most obvious one, most common one would be, oh, we'll put a new levy on to avoid that deficit. Well, you don't really get to count a new levy as a way to avoid a deficit. We're asking for a plan that counts on overcoming that fiscal distress based on things you can control right now. There is an opportunity, though, to identify if you have preferred plans that might include new money issues or maybe renegotiating collective bargaining agreements. There's an opportunity to include that information, but it's not part of like that plan workbook that overcomes the deficit. The written plan is made up of a written plan workbook, an accompanying narrative, and then the board must approve those. So tonight, like the board president had mentioned, you'll be acting on a piece that only relates to fiscal year 26. So there's a written plan workbook in there. There's also an accompanying narrative, and you'll be approving that. We won't fixate too much on this. Just wanted to say that the process involved in that plan workbook starts with taking your existing forecast and evaluating the variances in it. We want to sit down with the administration, superintendent, treasurer. We like to get a sense of what's happening in that forecast and make sure that you understand what's happening in that forecast. Sometimes it's a way to find a mistake. Sometimes it's a way just to start the conversation about something that might need adjusted now. Because just because this was approved on October 13th doesn't mean that all the work happened on October 13th. Some of those estimates might go back to September or August. So maybe there's something that changed, in the last few months, and maybe the district would like to make an adjustment related to those changes. But in this particular case, we evaluate the variances within that forecast and make sure that everyone's comfortable with them and understands what they are. So that other part of the process would be asking yourself, if I knew back when I did this forecast what I know today, what would that forecast look like? So our changes in assumptions allows for that process to take place where you can recenter that current forecast, or you start adding expenditure reductions and revenue enhancements, which we call plan items, in order to overcome the distress. So there's an opportunity to kind of, I don't want to say correct the forecast, but recenter. The workbook looks like this. Didn't someone talk about the treasurer's report was unreadable because the numbers are so small? Yeah, we're used to doing that kind of thing.
Yeah.
So we like to use red. We use red and we use green. So these are not your numbers. This is just an example. Yep. So with developing plan items, this is where we're talking about things like revenue enhancements or expenditure reduction. And so there's an opportunity to develop the plan items there in that part of the workbook. And the idea here being the last slide you saw was all red. Now this one has some green because some plan items were incorporated. You can kind of see the impact flowing through this particular thing. And when we are looking at this, this is line 10, like we talked about earlier, with those first 2 years. And this is line 12 with that year being important. I kind of glossed over this, but I'll back up a little bit. There's also the department flags for those deficits at line 10 and line 12, which are basically just how much do you have saved up at the end of the day. But more importantly, and it's a leading indicator of financial distress, it's line 6.010, which is called, we call it deficit spending. So it's not how much is in your bank account, it's how much did you lose this year. And typically when you see a pattern of losses year over year, you have an eroding fund balance at the bottom, and eventually it catches up and causes significant stress. So any real recovery plan, beyond even just the written plan that we might require in order to overcome those bottom line deficits, any real recovery plan needs to address deficit spending.
So, yes, we will avoid fiscal oversight if we eliminate a current year deficit, general fund deficit. But solving the structural issue of expenditures being higher than revenue, you need to reduce the expenditures so that that deficit spending is eliminated. And generally what you see in the forecast is that once you eliminate it, it kind of cleans up all the rest of the years as well. So when the board submits the plan and approves the plan and submits it, these are the expectations that come along with that. Approving that plan commits the district to implement those plan items. And the department's going to review the written plan submission and approve it. And we will ask the district to update the forecast to reflect the plan items for the current budget year and for the next fiscal year, FY27. And then if the district did not update the forecast to reflect the plan or follow through with that plan implementation, that would be cause for fiscal oversight. I want to back up a little bit and say that we need to have a plan in place and it needs to be executed. If you want to change the plan, you can change the plan, but that needs to be done in communication with us, and we need to document it in the workbook. And it's really, it's not that difficult to do that, other than it has to come through the board and be approved. So there's flexibility there, but what we're trying to avoid is that a board approves a plan and then we move on and that plan doesn't actually, there's no follow through on that. You don't see the reductions being implemented. And that would mean you're not eliminating your deficit, and then you would end up in fiscal oversight. The first forecast or the forecast update this year is going to be in February. So districts that are flagged in February, we look at the same 3 lines. They'll get their notices in early March, and those written plans are going to be due in April. So it's likely that we'll be looking at your forecast again, depending on how the plan is and what is reflected in the actual forecast update in February. And we'll be working alongside you basically until we eliminate the deficits in all 3 of those forecast years at the lines that we flag. But in February, we'll see how the plans are. We'll monitor what that written plan looks like. And towards the spring, we'll be looking at, is the district actually carrying through with those plans? Or are we really looking at a year 2 deficit, an FY27 deficit? If we're seeing there's still a deficit in 27, you haven't been able to eliminate that, then that would be where we would declare the district to be in fiscal caution. We like to do that before that current or that year 2 deficit, forecast year 1, becomes a current year budget deficit, so that if you eliminate that deficit in the upcoming year, perhaps by passing a levy or doing some other things to resolve it, then we can let you out. So if you can't go into and out of caution in the same fiscal year. This is just reiterating that if you're projecting a deficit in FY27 this spring, those are the districts that are likely to be declared in caution. This is a graph, and we're not intending you to be able to read those numbers. Just wanted to show that the year 3 deficits are in gray, the year 2 deficits are in orange, and the year 1 deficits are in blue. And you've got both submission periods there. So every other graph is the next fiscal year. So following the red lines, I forgot I had this. So following the red lines, this year two deficit, of all those that had a year two deficit, only this many became a year one. Same here, all the way through. So we're seeing basically that most districts that have a year two deficit don't end up with a year one deficit, and they don't end up in fiscal caution. And I just threw that last one down there to show that the year three deficits, pretty much the same thing. They don't become year two deficits. So with the combination of a reasonably accurate forecast, which we keep up to date through the changes in assumptions, and the written plan process being implemented by the board and the superintendent with the help of the treasurer, most districts are able to avoid the fiscal caution designation. What do we recommend for districts that are in your position? Eliminate deficit spending sooner rather than later, because as I said, that will fix more than just this year's problem. Stop hiring and take advantage of any attrition that you're seeing. If someone leaves, don't replace them. That's one less reduction that you might have to make coming up. And then review your class size and your program offerings, and make sure that you have your classes are right size. And also, you can evaluate retirement incentives. Some districts find that to be a valuable tool. Others say that it's not helpful to them. So it's very subject to what the composition of your staffing structure looks like. For the board, direct your administrators to eliminate the deficit spending, restore and then maintain cash balances. We're working with districts that have deficits, so we say at least 30 days of expenses, get there first, and then 60, 90, you want to be more in the upper levels of that, to try to ensure the solvency over all 4 years of the forecast. If you don't have a finance committee, then we would recommend that you create one, involve a variety of stakeholders to help folks understand the complexities of the forecast of school finance, and to help people to understand the fiscal situation that you're in and the efforts that you're making to try to overcome it. And then right along with that would be the fiscal transparency, discussing the plan, the implementation status, monthly financial reports. It's important on the monthly financial reports to put budgets in place that reflect the plan that you're going to approve, monthly budgets, and then comparing your actuals to those monthly budgets to make sure that the plan is yielding the results that you expect. I see frequently there's a report that compares this year's financial numbers to last year's financial numbers. And that really doesn't work when you're in a situation where you've implemented a plan, because if you're going to do what you did last year, you're going to get the same results. You need to have budgets set up that are based on the reductions that you've committed to implement. This is Madison local deficit spending on line 6010, and then the ending cash balance is underneath it. So we can see here that we had some deficit spending going back to 2018, 19 and 20. We had some recovery in 21 and 22. We could make some guesses about what that is. And then 23 through the rest of the forecast, we are seeing projected deficit spending. As Chris mentioned earlier, we use $100,000 as a variance when we're looking at changes in the forecast actuals versus the projections. That's roughly the cost of wages and benefits for staff or an admin. So if you divide those numbers by 100,000, there is a place where a district can deficit spend, provided you have the cash balances. But what you see is that deficit spending grows incrementally. So the 7 becomes 9. I can't see it too well. 7 in 25, and then we're at 1.86. So we're going roughly from 7.5 to 18 to, what's that number down there, 23? Yeah. So you can see that that's growing. What is needed to write the expenses of the district is growing over time. And then obviously that just depletes your cash balance, and you can see that the cash balance is declining as well. I really like looking at these numbers because you can see that exponentiality of it. It also works when we implement expenditure reductions.
Right.
So for 100,000 that you implement this year over the 4-year forecast, you're going to get 400,000, 100,000 for each year. So the sooner you implement those reductions, the faster you'll be able to recover with the minimal impact to the staffing and the students. This is the same numbers in a graphical presentation. The top line is cash, the red line is your deficit spending, and it's basically showing that right about here is 0. And so it's showing that we're deficit spending and the cash is quickly falling away. This is just a screenshot of the department's website. You can go out there and check the status of districts at any time. You click on that link, it opens up the PDF that's shown at the bottom of the screen. Right now, we have 3 districts in oversight, 2 districts in fiscal emergency, and 1 district in fiscal watch. Fiscal caution is the first level of fiscal oversight. It's declared by the department when any of these guidelines are triggered. But most of the time, it's when a district has a current year deficit with no acceptable plan in place. Or if a district, when they get a notice and it says you have to submit this plan by December 21st and you don't do it, that would be cause also to go into fiscal oversight. There's some other practices that are on our website, but those are the 2 that generally get a district into fiscal caution. During fiscal caution, once that declaration is made, you'll have 60 days from the declaration date to come up with a financial recovery plan. It's the same workbook that the district is using right now. We use that workbook starting with year 3 deficits, precaution districts, all the way through fiscal emergency until a district's actually released. So you have 60 days to come up with what we're asking you to do right now without being in fiscal caution. But in addition to the requirement of the workbook with the narrative, also when you end up in caution, there's monthly reporting and monitoring of the plan implementation that occurs. So I talked about monitoring your monthly budgets and your actuals versus budgets against plans, the budget that reflects the plan. And once you're in caution, you have to give us those budgets, and we're going to be looking at it every month. And we'll be asking the treasurer to put together a financial reporting package, all the reports that the department recommends districts provide to their board, actually regardless of fiscal oversight status. District's responsibilities: develop that recovery plan, act to correct the deficit spending that we're seeing, the general fund deficits. But we also, under caution, which is different from your status right now, we require the district to manage expenditures at the line level. So once we set the budgets, if the district, we've seen more frequently, if the district underspends on a line, you can't overspend on another line. That underspending, that favorability, needs to go to the bottom line to restore your cash balances. So that means that when you commit to a certain level of expenditures, if you don't follow through with that plan, that could be a cause for an elevated fiscal oversight going into fiscal watch. That being said, as I said with the precaution, things change, and we provide the ability to amend the plan, to change the plan if we need to. So there's a lot of collaboration that goes on to make sure that these plans stay meaningful and provide the desired outcomes that we want, but that we're not holding you to something that you no longer need to do or something that you don't want to do if you have a different plan that you would put in place. This is a graph kind of like the other graph, but the blue ones are precaution districts. And then the green, yellow, and red are the oversight districts. You can see how many more districts we have in precaution or doing this work without the need for fiscal oversight. And pretty much the full last 10 years, we've had a relatively low level of districts in fiscal oversight. And that's said to be an encouragement to you as well, provided that you identify a plan and work with us, and we try to have that forecast be accurate, no surprises. There's a way out, and it doesn't have to be fiscal oversight. So if you're not able to come up with a plan to address the current year deficit in caution, or you're unwilling to come up with a plan, then the department would recommend watch, and the auditor of state's office will designate the watch. So what's different between caution and watch is now we have another state entity involved. It's not just the Department of Education and Workforce. Now the auditors are involved as well. Same reporting, same plan document, same requirements. And then the next level is fiscal emergency. Again, that happens if the district can't come up with a plan. The department will recommend it. The auditor of state designates and releases. More frequently, what we see is we have districts that have something show up on their forecast that's unexpected. So instead of having a year 4 that we see become a year 3 and we ask for a plan and then we work it through year 2 and year 1 and we avoid the oversight. If a district shows up with a year 2 and it's significant, it can be difficult to turn the ship quickly enough to avoid that current year deficit. And we've had districts show up, they've been fine in their spring forecast and show up with a couple $1 million as a deficit in year 1. And in those cases, they're actually wanting to go into oversight because of their cash flow issues are happening. So really the only reason for a district to end up in emergency is if you can't figure out how to right the ship and you're going to need to have a solvency assistance in order to receive cash to be able to pay your bills. And in that case, sometimes, it's like, can you come up with a plan? And it's like, no, we can't cut, or we might have clauses that prevent us from making cuts. So whatever the case may be, it's generally most of these designations, we're all on the same page. We're saying, yes, we've done what we can. We can't do any more right now, and we have to go to a higher level of oversight. In fiscal emergency, a financial planning and supervision commission is established. So it's a separate entity. It's like its own agency. It consists of 5 members. 3 are local members. 1 is a designee from the Department of Education Workforce, and the other is a designee from the Office of Budget and Management. The Auditor of State's office serves as the financial supervisor, and the Attorney General's office is involved in providing legal counsel to the commission. So we went from do it yourself, DEW is going to provide the same assistance, but there's more requirements and caution, to then the Auditor of State's office is involved in watch, and then we have a separate commission that's involved. So the layers of oversight are just, cumulative. During fiscal emergency, any financial decision the board is making will have to be reviewed and approved by the commission. So the board no longer has the final authority to expend the district's dollars. These are just the folks that I listed earlier to you, 5 voting members. So again, really, the tools are there, the resources are there. If we can all collaborate and do the work together, we can avoid fiscal emergency the real reason that a district would want to go into emergency would be if you can't eliminate a deficit and you need solvency assistance. In that case, the auditor will come in and certify the district's deficit. And then once that's certified, the department goes to the Office of Budget and Management, to the controlling board, requests approval to be able to give you an advance of your state aid. So it is your foundation payment. You'll receive it in that fiscal year that you're projecting a deficit. And then that needs to be repaid to the state over the next 2 fiscal years. So if you think about the deficits that we're projecting, we have a current year deficit we can't meet. We'll come in, the state will give the dollars to get the district out of that, but we're just going to divide that in half and add it on to the higher deficits in the next 2 fiscal years. So it doesn't go away, and it basically becomes harder. Also, in fiscal emergency, the auditor state's office will review the accounting records of the district and issue a report on accounting methods. Whatever they find that isn't meeting their requirements are put into that report, and they all have to be resolved in order to be released. In emergency, a recovery plan is adopted. It's like a 2-stage recovery plan. The first one sets the management directives that the commission gives to the district. That's adopted at the first meeting. But then the recovery plan, the revenue enhancements or expenditure reductions the district's going to implement, that's due within 120 days. That's the workbook, and that work will be done by the local administration and the Board of Education. So regardless of the level of oversight, the district, the board, and the administrators the board hires are responsible for resolving the deficit and figuring out what programs changes you're going to make to right the ship and to eliminate that deficit spending. Districts spend about 3.5 to 4 years in fiscal emergency, and some districts have been in more than once. How do you get out? It's the same that we're telling you today. Reduce your expenditures, eliminate the deficit spending. The auditor will require all 4 years of the financial forecast to have positive balances, and that deficit spending is pretty close to eliminated. And then addressing the report on accounting methods. Looking back at the district's current forecast, we see the deficit spending and the consequences on the district's cash balance. Best practices, maintain fiscal transparency, watch your cash flow if you are close to projecting a year 2 deficit next year. The cash doesn't come in equally over every month. There's ups and downs. July, January are generally pretty sparse, and so you want to know how you're going to manage that. It's the responsibility of the district to identify the reductions or the revenue enhancements that are going to resolve the situation, because we are a state of local control, and that will remain regardless of the level of fiscal oversight. Collaboration is key. So own the problem early and resolve it as a team. Generally, if there's 3 sections, the treasurer's office are the folks responsible for quantifying the changes that are identified, making sure that those numbers are accurate. Superintendent's office, the administration need to identify the changes that are going to take place, and then the board needs to implement them. And if any one of those groups isn't on board with the process, then the process isn't going to work. So again, collectively take ownership of that and resolve to solve the problem. That's our contact information, and happy to answer any questions.
Thank you.
So for those who may have joined us late, you've reviewed a whole lot of different levels of oversight, and we're in the very beginning stage of being identified as having an issue, not in one of these fiscal oversight categories, right?
That's correct. You've received a notification of deficits in years 1, 2, and 3. And as we discussed, generally a year 1 deficit would be a cause to go into fiscal caution. But we talked about it with the district, and the administration agreed that you could come up with a plan and that you would approve that plan tonight. And I know it's on your agenda. So that is the reason that you're doing it. We needed to know that everyone is on board and committed to not having a deficit this year. And you'll stay in this level until you can't come up with a plan item and we actually do current year 1 deficit, or if you're unwilling to come up with a plan, that would be class 2.
I have a question.
Mhm.
So you named 2 different dates as deadlines. You named the December 21st deadline and then the February date. Is the February date like the final draft or?
December 21st is the deadline for your written plan.
Okay,
The next forecast submission is required in the month
Okay.
of February.
okay.
So they changed the submission years this year. Prior years, it's been November, it's due at the end of November, and it's due at the end of May. But the General Assembly changed it. It's now due February 1st through 28th is the submission window. And then in the coming fiscal year, it will be due in August.
Okay,
So this is a transitionary
so the
year.
February date has nothing to do with our plan that we're talking about for December's
No.
due date. Okay, that's where I got a little confused. I was like, is that a final or? Okay, all right, thank you.
The plan that you're going to approve should be reflected in the February
Exactly, yeah.
forecast. And if there's any, if any changes occur and we still flag you, then we would be talking about, well, what's in the forecast and what's not in there. Are we still on target? And as long as we're all working together, we have
And we
plans in
work the
place.
plan, by the time the February date comes around, that should be already implemented or included.
Yeah.
Okay, thank you.
Mhm.
It's December 21st one. How hard is it to get an extension on that?
You have to ask for an extension and there has to be good cause for the extension.
So basically, we are voting on, I think it's 340
Yeah.
some thousand tonight. And then that will make it so that we have a
Current year.
positive ending balance for this particular upcoming year here.
For this year.
Yeah, this year.
Ending June 30th, right?
Mhm.
Yeah, so, and then by the 21st is when you want for the next 2 years. Is that what I'm hearing?
Mhm.
Okay, so by December 21st, you want us to vote on or submit a request for an extension. If that request for an extension, if we submit that by the 21st and that is denied, then is there a second date that you say, okay, that was denied, you now have till this date to approve that plan? Or is that, once that's denied, we're just automatically put into fiscal oversight?
So I didn't say that the request for an extension had to be on, like, that you could do it on December 21st. If you want an extension, you need to ask for an extension. It's not going to happen overnight.
Mm-hmm.
And actually I think there's some language that says, you have to ask for it within the submission window period.
Okay.
But if you ask for an extension, there's a determination is going to be made, and then whatever that decision is what's final.
So then, so if they say no, that they don't just give you, then you've got to make these changes within this amount of time, or no, no, it's too late. We've denied your request, and now you're in fiscal oversight.
Yes, if you don't submit the plan by the required due date, that would be cause to go into fiscal caution.
And then, just because sometimes, I think it's important to really just put it out there. Basically, the state is telling us we either make these decisions or they're going to come in and make the decisions for us. So that's
No.
really,
That's not actually.
but at the end, when it comes to fiscal emergency, if the board continues to not make these cuts or cut where we have to cut, the state then comes in and does it for you.
No, in fact, I said just the opposite.
Okay.
during the
So then what
presentation.
do you do exactly if the board continues to not make any reductions? They don't, whether it's staff or buildings or transportation or whatever, they continue to go down the same path that they are right now. And the state comes in and says, we need you to do this. And the board does not come up with a plan and continues to just not. Then
Yeah.
what happens in the end?
Well, as I said, there's 3 layers in fiscal oversight. There's caution. We're working with you. You'll get another 60 days if you go into caution. If you still don't come up with a plan and commit to implementing the plan, we'll recommend you to watch. You'll get 60 days in watch. And if you don't come up with one, then you're going to go into fiscal emergency. You get different levels, additional oversight. You're working with DEW. Now we got the auditor and DEW in watch. And in fiscal emergency, you also have a financial planning and supervision commission. But that commission, in any one of these levels, you're going to be told the same thing that we are telling you in our notification letter. You have deficits, you need to identify the revenue enhancements or the expenditure reductions that are needed in order to eliminate your general fund deficit. That'll get you out of needing to ask for solvency assistance. But to get out of fiscal emergency, you're going to have all 5 years of that, or 4 years of that financial forecast are going to need to be positive. But Ohio is a state of local control. That commission is not going to come in and make the decisions for you. They're not going to close down a building. They're not going to negotiate your agreements. They're not going to figure out if you have insurance problems, how you're going to fix those. I don't know what the inherent, I'm not saying any of those are actual
Right.
problems here,
Right.
but the decisions about how this district is going to right the ship lie with the Board of Education and the administration that you hire.
So I guess my question goes back to, maybe it's different, but we have a neighboring district that was in fiscal emergency. And they basically had lost, they could no longer make those decisions.
Who is that?
Ledgemont,
Pardon?
Ledgemont. And they're gone now.
Yeah. That was before my time, and I really don't have the details about that. But I think even at the end of the day that they faced ongoing solvency assistance problems, and the board made that decision. The state did not force that decision to be made. That would be a board decision.
Other questions?
Thank you.
You're welcome. Thank you.
Thank you.
Where you got, I was gonna.
I don't have the agenda. Do you have a lot left on the agenda?
Yeah. We have a good amount left, yes.
People stay.
Okay, perfect, thank you. So I think we finished with donations, went back, and then we're back to number 10, which is reports.
Correct.
Administration team. So I just wanted to again thank both Kim and Chris for coming out and speaking with all of us and updating us. And tonight we'll have on the agenda for approval the reductions that we've made for the current year. And then, we have, hopefully everybody's seen my updates I've done on Facebook and in the community. And then I have another meeting tomorrow at the library where we'll continue the conversation. And as you've heard tonight, we need to speed up the conversation a little bit to meet some deadlines that we have before us. But I think we have a definitive process to arrive at the needed changes we have to make and needed reductions we have to make. So I really appreciate our staff has reached out with a lot of different suggestions of considerations for us to look at. The community will also get a form that I'll share that has an opportunity for the community and families to share recommendations for us to explore. And we want to be very collaborative and transparent through this process because it is really difficult. As we've talked about, we're looking at roughly a 10% reduction that we have to make in a very short period of time from December 21st, which was identified, and those changes have to be made as we move into the next school year. So it has to be done very quickly. So, but I'm very grateful the school board, our staff, our community, our families. I think that we have a lot of strength here and we can find those opportunities. So I look forward to that conversation some more tomorrow and over these next few weeks and months as we move forward to that. So I just wanted to share that in the administrative update, and we'll continue to get more in depth with that as we go as well.
Could you just review the basics of, what has caused the difficulties that we've had between the previous forecast and this one?
Yeah, and I apologize. You did mention that, and I had that, and then I skipped over. And that one of the things tomorrow I'm going to talk a lot about is about school budgeting and just the complications of that. And Steve and I have done quite a bit of work and our full administrative team that's here tonight. But really, when you look at our finances, and I think that it was identified, there's been a deficit spending, which I would say is tied to our enrollment. Our enrollment, I know I've shared a graph of over 10 years we've had declining enrollment, and enrollment is very directly tied to funding. And we heavily depend on the state for funding within Madison. So that connection of enrollment to our funding is very prevalent key point. And then additionally, there were some changes in the state funding method this year that was impactful. The county commissioners vote to give back taxes was an impact. All the other normal inflationary things that I think every single person in here experiences, whether it's gas or electricity, any of those utilities, the district has those rising inflationary costs and insurance, all of those things, and they combine together. And we're struck with this financial challenge that we've had to deal with very immediately that we're voting on tonight, but then also as you look through our next few years in the forecast, we have it occurring again and again. One of the points I would also agree is, which was mentioned earlier, if we impact that year one deficit and we resolve that through reductions, it eliminates the next year's reduction issues too. We can replicate that time over year, it can get replicated. And so it's why making those decisions early are really, really important and valuable. Don't put it off. Don't wait. It's difficult. It's hard. It's part of the reason that I think it needs to be transparent, have a conversation about it, listen to input, take that due diligence and time to really work through that, but then to make a definitive decision and then live that out and carry it forward. So,
I just want to throw this one thing out there because when you're talking about enrollment, there is something else. There's also a portion of this that absolutely cannot be controlled and that we can't forecast or foresee, which is we cannot control if there are children or families that move into our district. We don't know from year to year if there's going to be a family that moves into the district that may have children that have what they call catastrophic costs. And we can't control those catastrophic costs. And I know that nobody really wants to always talk about that because then it looks like we're insensitive. And it's not that we're insensitive, but it's a reality that there have been many years where there has been a significant amount of costs that we have submitted to the state for reimbursement, and we get a very small percentage of that reimbursement back to the district. And I'm sure that happens in other districts as well. I'm sure it's not just Madison, but that is not a cost that can be foreseen because we cannot control who moves into the district and who doesn't.
yeah, and it's always one of the challenges with the budget is, you forecast it and, things adjust. I think that one of the things we've put in place and has been very valuable as we identify the financial situation is we have a team that now meets weekly for an hour and we review our finances very, very detailed, very finite, and it allows us to be continually attentive to what we're doing and looking at not just the forecast, but also the actuals and what is occurring with the finances so we can make in those moment decisions to make sure that we're properly utilizing our taxpayers' dollars and making sure that we're making good decisions. Because you're right, every year there's flexibility. You can look at enrollment and you can track history and you can identify projections and you can be pretty accurate, but there's always going to be a little wiggle room here and there. But that's part of that nuance of a budget of a school district that's challenging of trying to make those momentary decisions as time is going forward. I think it's one of the staples I would recommend as we go through as we continue to have those weekly reviews of finances because it's, I think, made us all very sharp and in tune around how we use our money and what's the best way and are there better ways to do it too. So I think it's really good.
I just want to make a couple of comments before we move on, and the other board members want to. So if I were at home, I might be thinking, well, how is it that we actually don't have a positive balance at the end of the fiscal year we're in right now? What happened between when we created the forecast and had a positive balance and now we don't? And we're going to correct that here in 10 minutes or so. But what happened between then? Well, the Board of Lake County Commissioners approved a tax cut that affected the fiscal year that we're in right now and every year moving forward. They doubled the homestead exemption. So the homestead exemption is a discount on your property taxes that seniors who meet certain income guidelines qualify for. They doubled that. They also doubled the owner occupancy tax credit that people get. Those two things, when you add them together, it will have a negative impact on our budget by $400,000 every year. So that's going to be something we had to correct for this year that we didn't anticipate. So you had mentioned during your presentation, sometimes there are changes that happen between the time that you make your budget and things that happen in the interim. We've also had our health insurance costs are going to go up 19% this year. That's the health insurance that we provide to our staff members. As I've mentioned in previous meetings, we're part of a healthcare consortium. The consortium does group buying so that we get discounts. this particular year, the claims costs, so the amount of claims and the doctor bills and all of that added up to more money than was anticipated for the entire healthcare consortium. So not just Madison schools, but Madison. There's numerous other districts in there. And we were assessed, I think it was 400,000,
430.
$430,000 in order to catch up so that we had enough money to pay all of those bills and have a healthy balance in that consortium. So right there, just those two decisions that were made affected this budget by around $800,000. So it doesn't take much, to have a problem to impact the budget. So we will be voting on, and I fully expect we're going to unanimously approve these cuts that will affect this fiscal year. And as Dan has said, those cuts or changes that we make will, every year they help the future years too. They don't just help this year, they help future years. At the end of last school year, district-wide, we didn't replace 6 positions. So when you have retirements or people who leave and move to other districts, those type of things that all organizations have, when you don't replace them, you get 100% savings. So if the person made $50,000, you don't replace them, there's $50,000 that you're not paying. Plus add in the health insurance that person might qualify for, all of that's 100% savings. I'm going to, when you have someone that you have to lay off, I'm not suggesting we're laying anybody off right now. I'm just saying if you do lay somebody off, public employers are reimbursing employers for unemployment. So that means if that person qualifies and gets $20,000 worth of unemployment costs, we get a bill for $20,000. So it's much easier, as you had said in your presentation, when you don't fill a position, you get 100% savings. If you have to lay somebody off, you don't have 100% savings because you have to then pay unemployment costs. So there's a variety of things that we'll have to look forward to. And I would encourage everybody to come tomorrow to Dan's presentation at the library, where he can go into some of this in more depth than we are here tonight. But I just thought we need to try to have some reasonable response and for the public who's at home watching as to what led to where we're at this particular year. And then we're going to talk a lot here coming up over the next couple of months about how to resolve some of these issues moving forward. I don't know if that helped or hurt, but I said it. So. Anybody else have anything they want to add? Or?
I think you did well.
Okay. The next item, 10.02, is a memorandum of understanding between the school district and OPSI concerning a adjustment to the annual uniform allowance presented for your consideration.
You need a motion?
Yes.
I'll move.
I'll second.
Any discussion? Roll call, please.
Mr. Douglas.
Yes.
Ms. Hayes.
Yes.
Mrs. Sensi.
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
Thank you. Item 11 is recommendations of the superintendent. 1101, there are 7 resignations of staff member positions. Number 2, there are 5 individuals for limited supplemental contracts. Under B, there are 11 individuals for supplemental contracts. Under C, we have 3 individuals for substitute teaching positions. Under D, we have 3 day-to-day substitutes. E, we have 1 individual for building substitute position. Number 3A, a transfer of a staff member from South Elementary to the middle school. B is the transfer of a staff member from North Elementary to South Elementary. C is the approval of a staff member from North night custodian to head custodian. D is the approval of the transfer of a staff member from the night head custodian at the high school to day head custodian at the high school. E is the approval of the transfer of a staff member from middle school head custodian to the day head custodian at South Elementary. F is the approval of the transfer of a day head custodian at the high school to day head custodian at the middle school. Item number 4 is to amend the contract of a staff member. These are all presented for your consideration and approval.
I'll move.
I'll second.
Any discussion?
Yeah, I just want to say one thing, which is, obviously, we're going to be voting on reductions today, and then we're turning around here and voting on, additional contracts. And that's, in my opinion anyways, how I feel about it is I wouldn't be willing to cut something midterm. If something was going to happen in the future with any of our sports, you can't fund half the sports for half the year and not fund the other half. So. Okay.
Any additional discussion?
Just in the future, yeah, obviously my term's running out, but some of these ones that are coming up to vote on tonight, the seasons have started. And I would think in the future, that the future boards would have these prior than the season, like the basketball or the wrestling, those things are going on. So you can't just say no and because, who are they going to coach? But I would think that we should, maybe in the summer or August, we would have those ahead of time so they could be voted on. And if they decided not to do it, that person or whatever, there's time to make an adjustment instead of right at this moment. That's just my opinion,
Thank you.
because we're making reductions tonight, a lot of money, but we're approving these contracts. So if we had some of these contracts ahead of time, maybe we could have wiggled, I don't know, negotiated, 10%. I don't know. That's for a future board, but that's just my thought pattern as a board member right now.
And my thought was kind of like, again, we can't just halfway through the school year say we've allowed some sports and now we're not going to continue going forward with spring sports or something of that nature. I don't think that that's an avenue that we could have taken because that just isn't fair.
Well, the compensation that we're approving is based on collective bargaining agreements. So these aren't things that we could negotiate individually with particular employees to have a savings there. Whether or not you offer sports is something I suppose you could have discussions about, but I just want to point that out is the individual compensation has been negotiated as part of a collective bargaining agreement. Roll call, please.
Mr. Douglas,
Yes.
Ms. Hayes,
Yes.
Mrs. Sensi,
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
Item 1102 is the approval of the deficit reduction plan we spoke a little bit about tonight for the current school year. Just to reiterate a little bit, so we are very thankful to have the time that we did with the state to work on this plan. I will tell you that it's very helpful to be involved in those conversations and really look through it. I know I told Chris, who I can't see back there, but I told him that I know Steve and I both greatly appreciated his help through this, and we look forward to working through the next steps as well. And then we look forward to never having that experience ever again in our life, as they do as well. They don't want to have that experience with us either. So, but I think it has been a very positive experience from the standpoint of being very fiscally responsible for the district. These reductions that we were able to identify, current year immediate reductions that we can make that could balance our finances for this year and as significantly as possible limit the negative impact to staff or students. So we were able to, as I was mentioning, really look very closely at how we were using our funds, and then making decisions that we could make. It wasn't tied to any contractual issue, but it again did not hurt our students or our staff in any tangible way. And we were able to identify a lot of reduction there. So part of the challenge as we move forward to reduce what we have to next is going to be harder, and it's going to be more significant, but it's looking at how do we limit the negative impact to our students and our staff members. But I appreciate the support of the state as we work through that to get to this point, to present this for your consideration or for.
Do you need a motion?
I'll move. I'll second.
Any discussion? Roll call, please.
Mr. Douglas,
Yes.
Ms. Hayes,
Yes.
Mrs. Sensi,
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
Thank you. And finally, I have a number of items under the consent calendar. 1201 A is to enter into agreement with Crossroads Health for day treatment program services. B is to approve an addendum to the agreement with the ESC of the Western Reserve for participation in the Crossroads program. C is for the superintendent or designee is authorized and directed to dispose of the property mentioned following, including weight room equipment, damaged desk, and other miscellaneous items located at 3100 Burns Road. D is to approve a staff member for the volunteer middle school wrestling coach. E is to approve an individual for volunteer high school wrestling coach. F is to approve the individuals for the Ohio Principal Evaluation System as evaluators. G is to approve the following individuals for the Ohio Teacher Evaluation System evaluators. H is to approve the following staff members for the Ohio Counselor Evaluation System evaluators. And just to point out that that's a yearly requirement. I don't know that it had always been, but yearly you'll see the list of names to be the evaluators for those positions. It's a requirement through the state. And then I is to enter into a memorandum of understanding with the district and the state support team to provide family engagement funding to the district. Those are all presented for your consideration and approval.
I'll move.
I'll second.
Any discussion? Roll call, please.
Mr. Douglas,
Yes.
Ms. Hayes,
Yes.
Mrs. Sensi,
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
We have a need for executive session. All right, we have a motion for adjournment.
I'll move.
Second.
Roll call, please.
Mr. Douglas,
Yes.
Ms. Hayes,
Yes.
Mrs. Sensi,
Yes.
Mr. Thompson.
Yes.
Motion carries 4-0.
We are adjourned.